When you start home shopping and look into getting a mortgage, the importance of a good credit score becomes very apparent. And there are other considerations that lenders use to qualify you for a mortgage loan, but your credit score has the most effect on the interest rate you'll be able to get. So today, I'm going to talk about how credit score affects your mortgage rate, how credit scores are split into different brackets and labeled, the scores required for different types of loans, and some ideas to raise your credit score. I'm Jana Classy, and my husband and I are realtors here in the Eastern Panhandle. So your credit score, good credit, reassures lenders that they will be paid back. And your score is calculated most often from the FICO scoring model, and that'll include a history of your payment habits with borrowed money. And each lender sets their own standards for what rate they'll apply to a particular credit score. And that's why it's a good idea to shop around for a lender. But generally, the lowest rates go with a credit score of about 700 or above. And as a rule, the rate adjusts each time a credit score moves up or down by about 20 points. So, for example, if your score drops to 680 from 700, you'll likely see a small bump in your interest rate, which means your payment will be slightly higher with that drop in your credit score. And here's the breakdown of how different scores are labeled. A score of 740 or higher is considered excellent. 700 to 739 is good. 630 to 699 is fair. And then below 629 is considered poor credit. And the four types of mortgage loans, conventional, FHA, USDA, VA, they all require different qualifying credit scores. Government-backed loans like FHA, USDA, and VA will work with lower credit scores, but the loan fees are going to be more expensive. FHA loans are the least restrictive on credit scores. They could work for people with a score as low as 600, depending on the lender. VA, USDA loans usually look for at least a 640 score, and conventional loans place the most importance on credit score, so they'll require a higher credit score as a rule. And here's some ways to improve your credit score. First, check for any errors on your credit report and work toward fixing them. Of course, make your payments on time, and don't let your credit card balance go above 30% of your limit. And then when you do shop around for a mortgage, do it within a short period of time, no more than 30 days, because too many spread out inquiries can lower your score. So working on your credit score is a good idea, but if you want to buy a house and right now you have a score that will qualify you to get a mortgage loan, then I would go ahead and take advantage of the current low rates rather than spending months improving your score, because by then home prices and rates may have gone up to a point where you won't gain anything. You'll have a higher score, which is good for other credit purchases, but you'll likely be looking at higher home prices and rates. So my advice is to go ahead and take advantage of these historically low rates if you qualify for a mortgage loan. If you don't qualify for a mortgage loan now, then make raising your credit score a priority. Okay. Thanks so much for tuning in. If you've got any questions about this, or if you'd like a lender referral, we know some good ones. We're at 304-264-2828. And we've got a page on our website where you can see the current interest rates and the pros and cons of each type of mortgage. So that link is meetmeinthepanhandle.com/mortgages. I'll put a clickable link in the comments below as well. Okay, thanks so much for tuning in, and I'll see you next week, and have a great rest of the day. Bye.